Hi, good evening. Today's Friday, June 25th. S&P 500 has made new highs for the last 2 days. And it was some kind of similar price structure. We traded in a very narrow range during the extended trading hours, after hours, in about 10 points range. And then we break out and slowly grind up during the regular trading hours. So we closed on the high for the week, and the only difference is that Nasdaq did not make a new high today. It made a new high yesterday, but today it was kind of trading mostly again in a very narrow range as well. So the volatility made new yearly low, another yearly low yesterday. And so the markets are also kind of trading in a very narrow range, slowly grinding up. And Nasdaq was down only 25 points, which is really not that much. And perhaps the reason Nasdaq was a little down today is the bonds that were down over 0.5% today.
So we can also look at the contract. So it was a big move in the contract, right?
Right. I was mentioning last week that I saw a study that the week after June option expiration, which was this week, usually has a negative bias. And so it's usually down at 80% or so. But of course, there's always the first time. So this week was different. And Dow Jones was up, for example, 3.4% this week, which is never happened in the last 30 years. So, that's why I'm always confused with those statistical studies, whether they're valid or not. Even if the probability is on your side, it doesn't necessarily mean anything. And like I said, Victor knows better than me whether this study is valid or not. I'm not, as good statistically, obviously. But according to the study, the week after the option expiration had very bearish tendency. And of course, we had the exact opposite. Since the Monday rally, the market pretty much never looked back, and we rallied pretty much in a straight line for over almost 140 points or so on S&P 500, which was a very nice rally, the largest weekly rally since February. So on top of this, we had the core PCI data came in at 3.4 year over year, which was the highest since 1991, which is ironic because while this data came in pretty hot, today the commodities sold off. Some of them sold off. Copper, lumber, broke into new low. So as the CPI data, inflation data is coming in hot, the commodities are selling off. So I don't know what it means, whether the inflation data is just delayed and this was transitory or not. I don't know. We shall see. But at the same time, the Boston president, Fed president, Rosengreen, all of a sudden said that Fed worries about froth in the markets and worries that people will assume very easy monetary policy is permanent. He also said that he's not surprised by high asset valuations, saying that it's kind of tied to the easy Fed policy. He also sent a warning saying that it's time to think about how quickly to remove accommodation. It's time for the Fed to start thinking about pulling back support. So yet again, another Fed speaker, we have probably 10 of them this week alone, and another Fed speaker saying the opposite of the one before. But it's not surprising that the market just doesn't care anymore because whatever, next day somebody comes in and says the opposite. So why should the market bother? But
I think that there's this phenomenon right now, what I call hope springs eternal, about there not really being inflationary pressure in the market. And this chart was in the Wall Street Journal today, where the title is "Rising Inflation Looks Less Severe Using Pre-Pandemic Comparisons." And so it's like they come up with this arbitrary level of either being above or below 2%. And then, that we had this spike, and they're making the claim or the insinuation that this is just purely transitory spike, and we're just seeing this just an aberration.
Right.
And so nobody should change their expectations with regard to inflation, despite everything that's going on. $1 billion infrastructure bill about to be passed, and so there's there's continues to be rent forgiveness in places like California and in New York. So these types of things, they have a hugely inflationary pressure, I think. But I think that a lot of, let's say, mainstream economists are still not seeing it that, or not regarding it as anything but a transitory situation, which I'm not sure that I agree with. I think that there's a lot of like cognitive dissonance around this, and an attempt to not to say why it's not a ratcheting, or it's not a rising inflation.
Well, just to play devil's advocate, what I would think they would say is a few things. A, income came in today below expectations and down, declining compared to previous months, as unemployment checks ran out. At the same time that rent forgiveness has only been extended for 1 more month. So in theory, they can't really extend it permanently. I mean, they could, but not likely. So as that runs out, people finally have to pay their rent on lowering income without unemployment. And as for the bill for the infrastructure, it's highly questionable it's going to pass. They agreed only to an extent, so they could just go on their extended vacation and celebrate 4th of July, etc. Once they come back in mid-July, they're going to start all the negotiations all over. Who knows if it's going to pass, on how, or what. So, that's just my devil's advocate.
Well, I would just say, I mean, to give an example of what I mean by like not a full reckoning of what is, essentially a whole generation has passed that has never really seen any kind of significant inflation, and more than a generation. And so President Biden himself, he gave a press conference yesterday where he first said inflation's totally under control, don't worry about it. And then was asked about, well, what about all these positions that employers can't fill and have been unable to fill? And he sort of leaned forward and kind of odd, but leaned forward and said, you pay them more. Well, wait a second. So it's just wage push inflation is what was regarded as the primary source of inflation in the 70s. And that this was, because of demands for more compensation, our workers would strike, or they just wouldn't accept the job or something, or they'd abandon their job. And that's exactly, on the one hand, it's being said that inflation's under control, and we come up with kind of charts like this. And on the other hand, there are labor shortages and shortages of other things, and the policy response is pay them more, which is inflationary. So, and I'm not saying that we shouldn't pay them more or anything like that. I'm just saying, well, it's just there's there's a desire not to one, manage expectations about inflation, but two, the policy is geared toward more inflation. And very few people that are alive today, well, maybe alive, but not in the policy sphere. Somebody like Alan Greenspan, I guess, still alive, but or Paul Volcker, but he may have passed. But the point is that it's been a whole more than a generation now, 40 years since that policymakers faced any kind of significant inflationary pressure that they had to deal with and do something about. And I don't think they quite get it, really, anybody, or that they're aggressive enough, or they've done enough to prevent it. On the other hand, I'm going to say, on the other hand, I mean, there's the pressure is to try to do something about the COVID shutdowns, which were pretty much all government created crisis, right? In places like New York, where restaurants couldn't even operate on a to-go basis and so on, unlike some locales. So there have been all sorts of things that whether or not it was the right decision, I personally don't think it was, but whether or not it was the right decision, it's what was made at the time, and they've been trying to cover up, make up for that economic shortfall. But I don't see a way around it in the near term. It's sort of in some ways analogous to after World War II, when the economy kind of was being, people were coming back from the war, and the demand shifted drastically.
Right. And yes, as for wage pressures, I think it's a lot of employees that refuse to pay more, and they're still waiting for that unemployment benefits to run out, hoping that once they run out very soon, then people will rush to work. But either way, I think the market doesn't care about any of this. Like Victor says, it only cares whether it's woke or not. And, the last couple of days were very woke. For example, today, the cop who killed Floyd is sentenced to over 22 years. Quite a woke announcement. And at the same time, Portland police had another incident where a cop shot a man, and the riots were about to break out. So the Portland police had to urgently announce that the guy who was shot was white. So not to worry, no black people were harmed by the police. I think it was quite the reverse. If I'm not mistaken, the data is still fuzzy. The officer was black and the guy shot was white. So we don't care about police brutality in this case, just like in Washington, D.C., that woman who was shot unarmed coming in by a black cop, we don't care. So, as long as everything is woke, the market rallies. And as long as our commander-in-chief seem to be suffering from dementia on a daily basis, it's really sad to see. It's a tragic condition that there's no cure, but he seems to be being herded by his handlers. Like most of the time, he really doesn't know where he is. He could read the teleprompter, and that's about it. It really is. It's just a sad condition, speaking from the medical perspective.
Right.
And at the same time, the Democrats just announced probe into Biogen Alzheimer's drug. Did you hear that news? What's that all about? Aduhelm?
Aduhelm, yeah. Aducanumab is the generic name for it, right? So there was so that's been a source of controversy. Like Janet Woodcock, who is the nominee for FDA commissioner, is perceived to be very pharma friendly. Okay, she's very much a fan of or the pharma industry likes her, and she's bullish for pharma. She said that something like, gave an interview where she said that the people that resigned from this panel, that they were the reason they resigned was over process issues, not that there was some problem with the policy. And I think that it's like my own view is that the FDA, unless there's that they ought to, that the way that we had it before 1963 was better than post 1963, although the pharma industry might disagree with me, because it's one, very expensive to go through the clinical trials for efficacy, and you'd have to that's by far the biggest cost item, but clearly it's in the public interest to have things coming to market that are safe or have some sort of safety rating for them. But a lot of drugs have not come to market because they've not been proven to be efficacious in a large enough population. But there's no treatment for Alzheimer's. There are things that are prescribed for people with Alzheimer's, but they don't really work. They don't change the course of the disease or anything. It's not like heart disease or cancer where it can actually treat the disease. And so there's no treatment. And the what's the what's the answer? There are therapies out there that might work, and the reasons that were being given by the panel members is things like, well, it's expensive. Well, but wait, that's a that's a downstream issue. Why are we approving or not approving something? There's nothing in the Food, Drug, and Cosmetic Act that says, here's the process for approval, but if it's too expensive, then we won't approve it. And so, although it may be in whatever the country's interest to manage Medicare costs and so on, it's a different issue from whether this drug should be approved, and then whether or not, however Medicare handles it, well, that's a different issue. They might say the patient has to have these 6 criteria or something like that, and they just wouldn't automatically allow its use. But the people that I know that are in the neurology space, they're thrilled to have this drug. It's the only thing that, they might try it with some patients and not with others if they're in good health. Otherwise, then they'll try it. If not, then they might, there might not be a point in trying it. So I think that it's a big controversy, but I don't see how it's a winning political issue to say we should not approve drugs for Alzheimer's, that somehow we're better off not having a drug for Alzheimer's. And I think it's a totally losing issue to stand up for safety. Like, we should have no treatments for Alzheimer's.
I'd like to know which treatments they're trying on our president right now. So I wonder.
Right. Well, right. He may, I don't know. There's clearly some kind of gaps there sometimes. It's whether or not it's Alzheimer's, well, it's for a doctor to decide, but there seem to be some gaps, and it doesn't speak with the same.
And I think the relatives with this kind of disease could just visually recognize similar symptoms, unfortunately, in him. So
right. My own mother has dementia, and she recognizes me and talks with me, but also misremembers a lot of things and is not quite clear, who's alive, who's dead, people that passed away 25 years ago. Right. She might think they're still alive, and it's just, there's just some loss, and it's not Alzheimer's, but it's some different. There's different causes of dementia besides just Alzheimer's, but this is for Alzheimer's, where there's and it's specifically for the case where, which is a hypothesis that's not been fully proved yet, that called the amyloid hypothesis, or the tau protein amyloid hypothesis, which is that if these proteins can be cleared out of the synapses, then it would improve cognitive function and maybe slow the disease. But then there are other scientists who say, well, that's not quite that might not be the case. And so it's because of the inconclusiveness of that, there's the controversy around this. But in my view, I think it's good to have a treatment for Alzheimer's, whether or not it's going to work with all patients. And what we'll find is down the line that there are probably 3 or 4 different types of Alzheimer's. We're calling all of them Alzheimer's right now because we just don't understand the disease well enough. But down the line, we'll know that, well, there's type A, B, C, and D, or whatever Alzheimer's. And this drug works for type B and D, but not for A and C. Right. And we just don't know enough right now. And part of it is that doctors in a situation where there's no other treatment, and the patient is on the verge of a big loss in function, loss in their independence, or they have to move from assisted living where they're somewhat self-sufficient or to like a nursing facility, which is actually a lot more expensive. These types of things aren't being considered by the panel members that are erupting over this. They only look at what's the cost of the drug, which is a very short-term thinking. And if someone is in nursing care, then it costs about 3 times as much as if they're in assisted living. And just speaking of my mom, who's in nursing care, I would love it if she were just in assisted living. It would be a lot more comfortable for her and so on, but that's not possible. But the longer that you can put that day off of requiring 24-hour nursing care, I think most people would say that's a good thing for their loved ones or themselves, and that is not being in nursing care is not a good solution. It's what you have to do, but it's not a good solution. So it's in the end, it's about extending people's healthy life as much as you can. But that's it amazes me the attempt to make somehow that drugs are being approved that where there's no other treatment. It's not like there's some cheap generic that's been on the market for 30 years or something that treats it adequately, and their concern is over some new therapy that's expensive and so on. There's no adequate treatment. There's no treatment. And why would you want to keep a drug from the market? So it's a really strange political stance to take. I think it's a loser. And I think that things like right to try, some of these are actually quite popular, regardless of where somebody stands on the political spectrum, that it's a popular thing to be able to get access to a breakthrough therapy if there's nothing else has worked. So I think this is, I personally think the FDA made the right decision here, definitely. And that the fact that they're getting a little bit of fire on it almost shows that they made the right decision. That if I think we'll look back on it as a very smart decision to have been made.
Well, and I think sooner or later we'll get more data anyway, whether it's working or not. It should be proven clearer how substantial are the benefits or not.
Well, it's always a question of for any treatment at all, even aspirin or something like that for people with heart problems, that it's a question of benefit versus risk, right? And so a doctor has to think. I think that in the end, in my view, the doctor is the best person to make that decision, and the patient together, or the patient's family, whoever is in that role, not the government. I mean, the government doesn't know what my risk profile is, and they don't know what, if I've got cancer and I could.
Right, but at the same time, again, the doctors often are pressured by the patient. So we should not have those ads on TV, because then the patient comes in and say, hey, doctor, I saw this on TV. Please give it to me. Well, no, you're not really a good candidate, but I saw it on TV. It's great. I want it. And so eventually a patient gets it. If it's between the patient and the doctor, we should remove TV advertising to the patients.
Well, but then, but here's the thing: what's wrong with patients knowing about what's out there?
Because they're not qualified enough, perhaps, and they just want it because it's there. It's subliminal advertising.
There's no other industry that's subject to fair balance. No other industry. And what I mean by that is it's specifically in the Food, Drug, and Cosmetic Act, where a pharma company has to say all of the negatives, the contraindications, and the negatives for their product right in the ad, along with without even stating that this will do something good for you. They can't even state that. They can state Well, it's for
Well,
this.
they do, because you know how advertising works, right? Of course, it's all visual. So they show you a 2-minute beautiful commercial of some recovery, and then at the end they quickly mumble something. It may cause
But
death.
why? I don't understand why there's some social good involved in keeping people ignorant. I don't understand where that, how that has a social good, or having less information, or having censorship of information, or for that matter,
No, I'm not for
government standing in the way of people getting treatments,
Of
how
course.
that benefits anybody. I mean, I just don't get it.
No, I'm not for censorship of information, but the people are not going to read the clinical trials and see the probability. I mean, doctors barely understand the statistics of all of those clinical trials, and most of them have mistakes in them. If you actually take a statistical analysis person, most of those clinical trials, probably half of them have statistical mistakes, and the drugs are less probable to cure you than the trial states. But even if the patients could, they're not really looking. It's not a fair information presentation. It's really an advertisement. Please use our drug. And so if you have two identical drugs, one is generic and one is non-generic, a patient prefers non-generic, even though technically isn't that the same exact thing. But the patient
There are no equivalent drugs. And what I mean by that is that unless it has exactly the same active ingredient, then there's not, if there are two drugs for rheumatoid arthritis, and they're both monoclonal antibodies, and one has a biosimilar, effectively generic competition, and one does not, it doesn't mean that they're equivalent. And at all. I mean, one patient may respond to one and not to another, and that's very common. And then second, and something like with these antibodies, the issue is that when a patient is on something that works, the doctors don't like to switch them, because a person can develop resistance to a new therapy. They go or to their old therapy if they go off of it. So let's say they're on something that's working just fine for them, or working pretty well, and it's a bad disease to deal with, but they go off of drug A and go on drug B because it's cheaper or something. And then drug B doesn't work, and they try to go back on drug A, and it no longer works for them because their body has developed antibodies to the antibody. And so there's, so doctors are, especially with autoimmune disorders, doctors are reluctant to switch patients, and patients know this too. The thing that patients, the people that are, worried about like advertising and things like that, tend to underestimate greatly how informed patients can be. There's a thing, for most major diseases, or especially rare diseases, there are patient advocacy groups that are built around that disease, and people go to forums that are specific to that. And there may be some bad information, but there's a lot of good information there too. And there's like educational materials and so on that are made by doctors that are hired by this organization to help patients understand, well, what are the options, and so on. And the most that an ad is going to do is prompt somebody to Google it and learn a little more. And the informed patients are going to go to the right websites, and they'll find that information. They can't tell a patient to do that in the ad. It's against the law. The whole, every single word has to be approved by the FDA, and down to the pauses and everything, and the image. All these things have to be approved by the FDA. There's no other industry whose advertising is regulated as tightly as it is for pharma, and where they have to state the negatives as a fair balance message. It's right in the law. So all these things, and then also when a rep meets with a doctor, clearly a rep has to stay completely on message and speak to the product label only, and not have any kind of off-label discussion. So All these things are extremely tightly regulated. Pretty much every pharma company, every major pharma company is like, there'll be one rogue rep or something like that. And instead of going to court over this with the FTC, a pharma company will settle. They don't want the bad publicity, and they don't want the chance that whatever, there was a manager of that rep who told them to do something wrong. And because then it's like the company policy. So there's they'll settle, and they'll settle on it's like in the billions of dollars. And so it's I think, I'm not saying that it's that there aren't bad things that happen in that industry, but on the other hand, there's no industry that's as tightly regulated in what it says about its products. There really is no other industry. And it's I think it prompts patients to learn more, and yeah, they can ask their doctor to do this, and if they don't like what their doctor says, they might try to go to another doctor. If they're trying to get like opioids or pain meds, well, that's actually illegal to doctor shop if you're trying to get that. But if it's like, I'm going to find a doctor that's going to be more aggressive in treating my wife for her ovarian cancer, I mean, who could blame anybody for doing that? And well, you're going to cost the system more. Well, okay. Well, if my wife dies, then the system doesn't matter to me, right? What good is the system?
Well, at the same time, what's good is the system if your health insurance is so expensive you can't afford it. So it's the other side of that whole thing where, it's absurd to pay $1,300 when, like, I pay $1,300 and I go to a doctor once a year, and $1,300 a month. So,
well, there's a lot of reasons for that, and it has like the medications are only about 10% of the cost of healthcare in the U.S. As much as people focus on it, it's only about 10%. The vast what is the real scam is what happens when somebody goes to hospital. And what happens is that there's the Uncompensated Claims Act. So a hospital can they play this game with the insurance company where the hospital will say, well, that's a $200,000 treatment, and so you came in there with stroke or heart attack or something like that, it costs 200,000, and then the insurance company says 200,000, what do you mean, we'll pay 120,000. And so the hospital gets to file a claim with the government to say, with Medicare or Medicaid, whoever, to say, we have an uncompensated claim. It cost us 80,000. We're not getting paid this $80,000 that the treatment really costs. And the insurance company then, they might say 120, and then because that would then mean that the patient had to pay whatever 20,000 or something, they'll adjudicate the claim, and they'll come back and be really magnanimous and say, we only took 100. We'll pay 100,000 so that the patient only has to pay 4,000 out of pocket or something like that, and then they get to claim a uncompensated claim too from the government, and they get these subsidies that encourage them to play these games with the numbers. If you ever look at your hospital bill, I mean, try to figure out what's really going on with that. And the reason is that there are many incentives to inflate things like wheeling somebody from one room to another, or using a cotton swab, it's like $700 or something.
right. Or $100 for an aspirin tablet. Yes.
Right. And so these types of things are, it's not like, well, let's just say um, people and institutions respond to incentives, and there are incentives to inflate all of these things. There's a doctor, I forget the name of it, but there's a hospital that's based in Oklahoma City that they don't take any Medicare or Medicaid. And so they don't get any of these uncompensated claims and so on. And they also don't take, they take private insurance if the private insurer will pay it, but they don't take Medicare or Medicaid. And so on it's primarily like an orthopedic hospital. So on something like knee surgery, and if you go across the street to the regular hospital, they might charge $40,000 for knee surgery. Whereas this hospital, it's exactly the same doctors. The same doctors that work across the street might work at this hospital, and it's a doctor-owned hospital, so they're getting a share of whatever income and so on, but they're getting paid like a regular salary also. But it might cost $8,000 versus 40 or 50,000 across the street because they don't have all of these crazy incentives to inflate.
Right. No, of course,
price.
hospitals is a huge racket in this country, and neither party is willing to do anything. It's that the whole healthcare, everybody talks about it, and then they just go on vacation and do nothing. So, yeah.
Yeah, and it's that part of the problem was that while Obamacare, PPACA did indeed. I mean, the exchanges, they did expand it for some people, but where the vast majority, something like 80% of the expansion and coverage came from, was from the expansion of Medicaid, which was originally for people that were poor. And it was pretty much expanded to the point where you're middle class, you can qualify for Medicaid in most states. And there are some states that chose to opt out of that, like Indiana. And Indiana more or less replaced their Medicaid system with what's called Healthy Indiana, which is like a HSA that's subsidized. So poor people don't have to put in whatever their deductible every year. They get a subsidy. And so what that means is that if they're health, and it's something like you get regular primary care doctor visit, this type of thing. So there's no incentive to not go to a primary care doctor. But if they don't need more serious treatment, especially if somebody's younger, then that money can roll over from year to year, and they can build up a pretty decent amount of savings, which you do need when you get older, right? That's when you really start consuming healthcare. So I think that there are maybe some bright spots, but I
need glasses to see them for sure, because every year the medical expenses are going up, and there's no incentive. That's the problem. It doesn't matter how often I go to the doctor, I pay the same as a person who's fully diabetic, obese, and smoking. And why am I paying for this? So there's no incentive at all for patients to stay healthy or to exercise or to do anything.
Yeah, it's a very the challenge is, I think that, okay, so PPACA, what the stakeholder or the true beneficiary of it was not the patient at all, but the so-called nonprofit hospital. And that's one of the biggest, like, calling things nonprofits, right, in my view, is one of the biggest scams in our system. Right. That people are allowed to do things that are very profitable under the cover of being nonprofit, and they get away with so much. And so these nonprofit hospital chains, they're the biggest hospital chains in the US. Some of them are owned by like Catholic orders and things like that, nuns and monks supposedly, but they're really the executives at the top of these, because they're
make millions, right?
Nonprofit. I mean, they're making like 25, 30 million a year in salary. Not bad if you're,
Right.
you know, have some, you know,
Yeah.
I mean, because these are not generally not doctors. It's like the old saying, you know, that if you can't teach, if you can't teach, administrate. And so, you know, these people, you know, they're not doctors, they're not
Amazing.
teaching clinicians, they're administrators, and they have totally different interests than the doctors that work and nurses that are working at the hospital. But they were these nonprofit hospitals. They went from a situation where, by law, if someone came into the emergency room and didn't have insurance, they had to treat them anyway. If they took a dime in Medicare or Medicaid, they had to treat them anyway. And they went from that situation to where, let's say, something like 2-3% of all of their expenses weren't covered at all. Didn't get paid back. They just had to, it was like charity. And they went from that situation to one where they were getting fully paid for that, for doing nothing but a little bit of lobbying. And now they get all of these, someone shows up, it's not, you know, there's not a write-off. They get totally, you know, they get fully paid. So it's it was a huge bonanza for these nonprofit hospitals. And the for-profit hospital, it's a little bit of a different dynamic. I mean, they have shareholders, they have transparency into their books and what are they doing and so on. And there's a lot of responsibility when you run a for-profit company. But the nonprofits, it's all hidden behind the veil. And as long as, so it's a totally different ballgame. Anyway, maybe we got a little off topic, but
sometimes happens. But let's talk about Bitcoin and
yeah, let's talk about cryptos. So looking, I think I went to daily. So I think that the story with Bitcoin is that it was actually, you know, let's say about 2 weeks ago,
right,
looked like it was going to attempt to rally back above this. It got back above the 41,000 level, and it looked like it was going to it did at least attempt to go back above that 42,000 level, but it failed, and that failure was took it right back down to actually be lower than that 30,000 level that it touched, and it's bounced, and now it's kind of back down. I guess I expect a bounce. It's clearly in a bearish cast right now. If you look at other crypto like Ethereum, it's right now just bounced a little bit more than Bitcoin did today. It's still below its 200-day moving average, which I think for Ethereum is kind of bearish. And so right now the whole crypto market is kind of bearish. I do think there will be a bounce attempt this weekend. There were some things weighing on the market this last week. The thing that some people were saying was that was the futures and options expiration that was this morning, actually, or very early this morning, US time, Eastern time, like 4 a.m. And we didn't really see any bounce after that. So it, you know, that may have just been hype or hope, maybe, that was what was weighing on the market. I think that it's just in this, it was overbought, you know, and it went into a bit of a bubble. But I think that it's I don't think that the cycle, we're clearly in a bear market, but I don't think that the cycle is totally over yet. But it could take some time, longer than I originally thought. I thought it was going to be about a 2-3 month recovery. but it's already been 2 months since Bitcoin peaked out. And I don't see the, it's not really recovering yet. With Ether, it was a more recent peak. It was about a month ago, a little bit, about 5 weeks ago. So I do expect there to be a little bit of a bounce attempt, but it's got both Ether and Bitcoin have a long way to go to really make this bounce into something more convincing. Bitcoin went right up to, and just in the last few days, it was a respectable bounce.
Right.
It went right up to this support, what was support, at about just under 36,000 now, and went right up to it, tapped that line, and then reversed off of it. It's not unusual to see multiple attempts at that, at breaking through. So I do expect another bounce attempt here, but unless it breaks through this level, which is now, as I said, about 36,000, just under 36,000, it's in a bear phase, and it'll stay there. And it could go lower if it can't make a convincing rally here. With Ethereum, it's maybe a little bit closer, kind of this 2160, 2200 level is what I'm looking at. That if it can rally up to that level, which maybe, I guess that's the same percent move roughly as Bitcoin, not that far. So it's going to be about a 15% move, which, well, it was off 9% today at one point. So it's not like a 15% move is out of the range of possibility. But still, it's there's going to need to be, it's got to put up a decent rally to get out of this bear phase. I could see, though, if it can't make a convincing rally, I expect a bounce this weekend, but if it can't make a convincing rally, then I think it could go lower. And I think that maybe range of downside numbers is something like 26,000, 25,000 on Bitcoin, and maybe about 1,600, 1,500, 1,600 on Ether would be my initial target if it's going to go lower. But then on the upside, then, as I said, next test is about 2150, 2200 on Ether, and 36,000 on Bitcoin. So those are the levels I'm really looking at. And right now it's in, I would say probably the direction is more likely to be down than up in the near term. But that could change. And
maybe you can have some positive news flow, because news flow has been rather negative for Bitcoin. Banks in South Africa, for example, the recent bad news, blocking customers from using debit and credit cards to purchase crypto. So the news flow, whether it's true or not, has been rather negative lately between China and this and that. So if there is some positive news catalyst over the weekend, maybe Elon Musk will tweet something. He's been rather quiet. So,
well, I think that the news flow is frankly about as negative as it can get, because as we've talked about before on this podcast, that the news about China supposedly banning Bitcoin was out there for years, and it was never really seriously done.
right.
And now it really is happening. And so this is, had this happened 3 years ago or 4 years ago, it would have killed Bitcoin much more than it has. And so I think the fact that it's off 50% off its high, that's actually remarkably resilient compared to where it would have been, let's say 3-4 years ago. So the one thing I found interesting is over the last several days that like some of the stocks like Coinbase, and we're looking at hourly chart here, but I'll go back to daily, that although Coinbase has been very volatile from its IPO and it's been mostly down, I think it's interesting to watch because it tends to be, for the most part, correlated with Bitcoin more than anything else, more than other crypto, even though most of the trading might actually be in other crypto besides Bitcoin. It doesn't matter. It's just I found it interesting that it's actually in relative strength compared to Bitcoin. It's been actually pretty strong. It's sort of flattened off and has made some rally attempts in here that are stronger than the rallies that Bitcoin has made. And I think this is maybe an indicator of some institutional interest, because it's a lot easier if you're, depending on what your charter is as an institution, if you want to play in the crypto space, what are your options? You could go through all of the issues of getting a Coinbase Prime account and adding that to your charter and so on, or you could just buy Coinbase stock, and it's a proxy for crypto. So and it's more exchange oriented, but it is a proxy because of they do have a lot of crypto on their books. So I think it's interesting to see the higher relative strength of Coinbase stock compared to crypto itself. So to me, that was saying that there might be there could be a bounce attempt here over the next week or so, but I think that probably the direction is slightly down right now, with unless something changes, unless the news flow gets a little bit more positive, and our capricious billionaires stop tweeting for a few days. So that's it for me right now. I would say that I think that again, there's some for someone who's wanting to enter, the next few weeks will be a good time. I wouldn't suggest jumping in all at once, but there are a lot of opportunities right now for a good like building a dollar cost average type strategy here over the next few weeks. This will you won't catch the exact bottom, but you won't be catching the top either.
Right. Yeah. So we'll see what happens over the weekend, and but S&P 500 so far looks bullish as long as we're trading above the 4230 level, which is the low of the last couple of days, and also the vol trigger. So as long as we're above that kind of range, 4230, I wouldn't be surprised if the market pulls back a little bit to test that level. But as long as it's above that level, it's bullish. But if we break below, then the picture will change. And like I was saying before, I'm still confused by this discrepancy between crypto and the market, the stock market. The stock market keeps making new highs as crypto is making new lows, which is a bit unusual. So perhaps the correlation has changed and the past is no longer predictive of the future. Or maybe crypto rallies to catch up. We'll see.
I think it's definitely an indicator of some sort of change in liquidity in the market, and it has pointed to turns in the market before, and so I do think there's that's a really smart way to think about it. That we don't know, it could catch up. There could be some big change, but it's not bullish for the stock market to have crypto down at 50-60% off its high as it is right now, and without recovering. It's indicating that there's some kind of liquidity crunch starting on the edges of the capital markets, and that they always start at the edges and then work toward the center. So are we going to see some sort of liquidity crunch in stocks, which basically means a sell-off?
Right. Well, a few countries actually raised their rates. And so perhaps the expectations will change, and Fed, like some speakers are saying, is planning to raise rates faster than expected. But there are some indications of liquidity being slightly down. So, right, there's that concern for sure.
Exactly.
All right. Well, thank you, Andy, very much.
Thank you. Have a good weekend, everyone.
Have a good weekend.